I'm saying let's proceed.
Yes.
Okay. So I think we have done until this point. We'll have done. I just spoke of how to do double entry just by way there, and I hope you saw that, right? Because if there are just simple matters, maybe you do it that way. Because I think maybe writing too much was was kind of, you started asking yourself, why are we even dealing with the financial statement that we need, right? So the double entries here, I just not write every note, but so for note one, we would have
I
debited.
just have to improve in a double entry.
Yes. So you have seen what double entry we would have done in note what? In note one, right?
It's 10.
Note 10, we
No, it's not
did it
one.
already. And note one is what we did on provision, and we said
Yes.
that move from 12,000 to 17,500, right? And so we said we have to take
Yes.
an expense to the income statement, which we decided to take it to the administrative what? Expenses, 5,500.
Expense. Yes.
And then on the credit side, we said that it should go to what? To warranty provision. It should increase the warranty provision so that it becomes 17,500, right? Of course, we are done.
Yes.
I'm just trying to narrate here, but we are done it already, so it's no big deal. Debit credit here, and this one was not how much? Not one, right? Not one. So you can see it's fine. So in my exam until this point, I would say, okay, not one is like it doesn't exist, right? So you have to find the way of nullifying matters, right? So you're saying, okay, until now I have maybe just a number of notes, okay? That's great. So whatever you feel like doing, you can go on and what? And do it, right? Oh, okay, this is fine now.
Yes.
Okay, if we go on, we have here land and the buildings. Some people sometimes they just say, okay, maybe I need to finish the income statement too, so they can just go and look at those. But although you cannot finish everything, sometimes like depreciation is on non-current assets, so you will ultimately encounter everything, right? For example, maybe let's say here we have land and the building. Let's say you're dealing with land and the building. That's what follows. Land and the buildings at cost, including land of 25. How much? 24. And wait,
24,000.
it should be 24 million, yeah? Should be 24 million. You can see the figure. They have said 1,000 many, meaning that 30 have been already held, but this figure doesn't have anything to do with these columns of debit and credit, right? So it's 24 million, which if you take the 30, then it should be 24,000, right? Okay, so land in the building.
Yes.
When you deal with PPE, PPE has a lot of things. So we find you have to depreciate. Maybe you have the building, you have the land component, you have the building, you have a lot of things. So the best way to deal with PPE is we usually.
Hello?
Yes. Hello.
Hello?
Yes. Okay.
Yes, now
we
I
deal
can
with.
hear you.
Let's go to land and the buildings here, right? So on land and the building,
Yes.
this is PPE, and the PPE usually has a lot of things. As you can see, land and the building, you have the accumulated depreciation, you have the additional information, you see. So you could have a lot of things. So the best way to do is to prepare the notes. So you go here. We had the notes for statement of financial position workings, yeah? So you could just write there and say maybe property, plant, and what? And equipment, right? Although, like I told you,
Yes.
when you speak of land and the buildings, that is property. You never know. It may be investment property or it may be what? Property, plant, and equipment.
PPE.
Because, yes, you need to go a bit and get some information, right? But, from this question, I had seen some written investment property, and that's why I did this. But if you are in an exam, you'd have to do this. You see, there is investment property here, so you can feel like, oh, that one should be only to just be PPE, right? But maybe, sure, since they have said it is on note 2, you could come and read. It says land and buildings are carried under the revaluation model. This point is sufficient to tell you everything, right? PPE uses revaluation model, while investment property uses fair value model. So this one would have been sufficient to tell you, okay,
Fair values.
this
Yes.
is PPE IAS what? 16. You get the point.
Yes.
So you'd come back here and say, okay, this is my PPE. I need the working for PPE. Of course, it's not how much? It's not two. Okay, let's just write there PPE. It's fine. So on PPE, we know that we have the land, like you have been told. We have the what? The land.
The land and the building.
Yes. Buildings. That's what we have seen so far, right? Buildings. Okay.
Yes.
You do whatever you have at your disposal and be done with it. That's the aim is to clear whatever we see, right? So you say land and building
Yes.
with 160. This is the should be the cost. The cost 160, including 24 million of land. So out of that 160, 24,000 comes from is land, right? So you can get.
Yes.
So if land equals to, and its cost, if land had a cost of 24,000, what remained went to building, and we know that the total figure was 160, right?
Yes.
It should be 160 minus how much? 24.
24.
And you would get your figure there, right?
Yes.
Yes. So let me just just that way. So building would be worth 136,000. You just proceed. After this one, you could say, oh, what to do? This is just the trial balance, and they have recorded once. Just get it out, right? Because whenever record it somewhere, you automatically put it in the income what? In the financial what? Position. It's like now someone
Position.
said, okay, maybe I don't have a lot of workings. So since landed building is part of an asset, they'll just go there to PPE and write 160. But imagine the hassle you'd have had to go through deducting and getting the actual depreciation, because land is not depreciated usually in the usual cases, right? So you'd have to
Yes.
the mathematics alone aside. That one would be so tiresome and you could confuse yourself. And that's why we resort to this method of having the separate workings, right? Okay, so we have done this already.
Yes.
Before going to note 2, which they tell us, we obviously see down here, we have also accumulated depreciation. Accumulated what? Depreciation. So I think we can also deal with it. Accumulated depreciation 1st August 2016 for land and what? Buildings. Of course, no land is depreciated, right? Yes. So land and what? And the building, we have the depreciation of this. You can see now, this our statement was for 31st July 2017. But this depreciation is for 1st August 2016. So you obviously see that depreciation for this year has not been included here, right?
Yes.
Until the beginning of the year, which is the end of the previous year. Okay. So it's just fine. We deduct it. It's 8,000 here, right? So we be done with this 8,000 and our accumulated depreciation, just like that, right? 8 how much? 1,000. So I would say until this point, I would say, okay, I have the accumulated what? Accumulated depreciation worth 8,000. So
Depreciation.
let's say and write this way, 8,000. You see that 8,000. So I think you can get the carrying amount at the beginning, right? Carrying what? Carrying
Yes.
at the beginning of the year. Okay, I'm not going to write.
Carrying amount.
Yes. So for land,
Amount.
since it won't have been depreciated, it would remain at 24. And for buildings, it would be the difference, right? 136 minus how much? Okay, we could say plus, because
Yes.
you have put the figures negative already,
Yes.
so you have to be careful, right? So in my case, I'll just say plus, because I already put it as what? As negative. So I would have 120, how much? 128. Is that fine?
120.
Yes. So you just keep going that way, right?
Yes.
Yes. You see, okay,
128.
that is fine. Now you can see, you can see, you could say, okay,
In the notes, we don't have something for building.
we are going. That's where we are going. We have not 2. We can just go there.
Oh, okay.
We also have the revaluation. So
Oh, okay, sir.
no worries, we'll see this, okay? So let's go to that note 2.
Oh, okay.
Okay, note 2, what does it say? Here it is. What does it say? It says land the buildings are carried under the revaluation what? Model is permitted by IAS.
Model.
That is great. And then we say the most recent valuation took place on 31st July 20. 15. That's 2 years late. That's 2 years back, right? Because our year is for on
Yes.
July 2017. So it was 2 years back, resulting in the values included in the trial balance above. Aha. So the revaluation took place, right? So you could have the revaluation loss or revaluation gain, right? Let's go. When they're telling you this, you
Yes.
go and check. You know you are the master of your own exam, right? So let's go and locate that revaluation issue. Yeah, it is. The revaluation surplus, 1st August 2016. That's great, right?
Yes.
Yes, so we have it as 24,000. So that 24,000, it was the previous revaluation what? Revaluation gain. Of course, that's no big deal because you already have it in the books. The revaluation surplus of 24 million, which you have just seen, resulted solely from these land and what? And the buildings. Do you know why? Before going anywhere, I've told you from this solely from this land and the building. You know, we said
And
that
build.
whenever you had the revaluation gain and you get a loss, you only revise it on the same asset, not even the same class. The same what? Exactly the same asset it should be. So telling you they arose from this soil, this rent in the building, they try to convince you that whenever there is a revaluation reversal, you can just.
Yes. The network. I'm not getting you.
You're not getting me.
Hello?
On my side, it's very fine. Hello.
Hello?
Yes, yes, yes. Your network then might have issues. Hello. 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 It's your network.
I was not getting you. Now I can get you.
Yes, maybe.
Yes, now I can get you.
Okay. Okay, let me try to.
Yes, I think it was network this time. Yes, I can hear you now.
Okay. Okay, so that's what.
I can hear you, sir.
All right, all right, all right. Let's proceed now. So that's what you have to do, right? You have the 24 million. Then we are told the buildings were estimated to have a useful economic life of how many years? Of 17
Yes.
years, right?
17 years.
Yes, 17 years, right?
Hello?
Hello.
Yes. You had gone.
Today there are a
Now
lot of
I can hear you.
interruptions. Okay. So going on now, you're told the buildings were estimated to have a useful economic life of how many years? 17 years.
17 years.
Is at that date. That is 2 years ago, right? And
Yes.
zero residual value. I think until this point you can see that's what buildings. On the 1st July 2017, the land was revalued at the end of the year. Okay, now before going here, you could get something, right? We have been given the useful life. Before doing the revaluation at the end of the year, we need to compute the depreciation first, right?
Yes.
The what? To compute the what? The depreciation. Right.
Depreciation.
Yeah, so that's what we need to do. So you have to go back at the top and get our what? Our depreciation. Right.
Hmm.
Okay, so let's go back
Hmm.
and get the depreciation. We go back here. You can see we had initially, okay, we had broken down this cost of 160 to 24 and the remaining for building, which was 136, right? And actually, we are talking
Yes.
2 years ago, and you can obviously see that was because this is 1st August 2016, the depreciation for that. So if you go here and see on this one, you have the buildings here 136, and we had a useful life of 17. Of course, I can see it makes sense. You can see here, how do we get depreciation? We usually take the cost, right, minus scrap residual value
Yes.
divided by useful life, which is 17. So you can see
17.
you get 8,000. That's why you had the depreciation of
Ah,
it was accumulated, but it
8,000.
was just for 1 year, right?
Yes,
So
yes, sir.
after
Oh,
you'd say, okay, this is fine. So this is our normal depreciation, and you know, depreciation using straight line doesn't change unless maybe
yes,
there have been a revaluation, a change of residual value, or a change of useful life. Nothing has changed, right? So depreciation would still be
yes,
at 80. How much? 8,000. So remember, this was the beginning of our year. This and the beginning of these balances were at the beginning of what? Of the year. So we charge depreciation for that particular year, right? Land,
yes.
zero depreciation. Buildings, depreciation of how much? 8,000, right?
8,000.
Yes.
Yes.
So now
That's year two.
you can start seeing now. Remember, this figure we copied, accumulated depreciation we copied, and the carrying amount was just the difference. But the depreciation is something new you have inserted here. So this is a double what?
Yes,
This is a double entry. We have inserted it ourselves. It wasn't there from the beginning. Whatever is above, we copied as it was in the from the trial what? From the trial balance, right? So what we copy from
yes.
balance, no double entry. But what we introduce ourselves, we have to put to pass the double what? Double entry. So obviously, we could see,
When,
oh, here now, just by the process of reducing the PPE by 8,000, it's like you have already credited it, right? So we know
yes.
this is how we deal with it. Now let me just show you. Depreciation is 8,000. How do we pass the double entries here? We say debit depreciation. Debit what? Debit
Depreciation.
depreciation by 8,000, and then we credit the what? We credit the PPE, right? PPE.
PPE. Yes, we are reducing it.
Yes. Now, just by the fact that you can see depreciation has been deducted here, it's like you have reduced their buildings by 8,000. So it's like you have credited the buildings there, right? And
Mm.
so what
Yes,
with is this depreciation amount should be taken to the income statement as an expense. You get that?
yes.
So if you do write it this way without writing their debit somewhere and credit somewhere, in your mind, you should be thinking like you are doing the double entry.
Now you've gone.
Hello? Hello?
Yes, I can hear you.
I see I have a lot of interruptions today. I think I should find a way. I should find a way that when I get off job, I should be finding a place. Because I'm facing, today I'm facing a very big issue. I think that is a solution. Okay. So let's, what is the time now? Wait.
I can't hear you, sir.
Yeah, right now? Okay, let's do this. Let's do it this way. Can you still hear?
I can't hear you. No, I can't hear you.
Said I can hear. I can, but I'm audible. I can see myself being heard. I think your internet today is,
Hello?
I'm saying your internet today is having it.
No, it's not the internet. You've gone again.
Yeah, on my side, I can see myself speaking. You know, when the microphone is fine, I can see myself.
Yes,
Then,
now I can hear you.
yes, that's
Now
why.
I can hear you.
Can you hear me?
Yes, now I can hear you.
You know, today I think that there is a problem with the internet. There is an issue with the internet. You know why? Because
Maybe.
on my side, when the microphone isn't working, if I speak, the name won't be visible. But if the name is visible, it means the microphone is working. You see, it shows who is speaking
Okay.
current time. Yes. So I can see myself speaking, but you are saying you can't hear. So I think maybe it's an internet issue.
Maybe it's internet issue.
It could
Let me
be.
try to repeat the router.
And let's just go on. Let's just go on, right?
Yes, yes.
Okay. So
We
you
proceed.
you'd have done it this way. Yeah? So sometimes when you find that maybe you have written here PP and you have this lot of workings, you have to try to decipher it and understand. Okay. So we have debited the building by depreciation of 8,000, and so we are going to debit the depreciation to the income statement. You do it right away. Don't wait. Right. So like here, I
Okay.
see that I've debited the building by 8,000. It's fine. I go to the income
8,000.
statement. These are my statements. Let's say maybe depreciation. I don't want to put it a single line item there. And so what am I going to do for depreciation? For depreciation, I'm going to charge it to administration expenses if nothing has been specified. Sometimes the question itself tells you what to do, right? Maybe it can tell you depreciation is charged to
Okay.
what? Maybe depreciation is charged to administration what? Expenses. You can see it, right? For example, you can see in this question, that's
Expensive.
why you need to understand.
Yes.
If nothing is specified, looking at this question at the end, it tells you, look, depreciation is recognized on a straight line basis through the cost of what? You see? Through the cost of sales. And no depreciation has yet been charged for the year ended 31st July. This statement is just a dummy. We can see ourselves from the trial balance that depreciation has not been charged, right? Because administration expense, because accumulated depreciation
Yes.
is only until the beginning of the year. So depreciation goes to cost of sales. How much? 8,000. So you can see now on the work
8,000.
on cost of sales, I would write there what? Depreciation. Depreciation. How much?
Depreciation.
8,000. Right. So after writing that 8,000
Yes.
depreciation, you would say, okay, this is fine. So you can know until there we are done, but we are yet to finish up with something here. You see, we are told on 31st July 2017, at the end of the year, the land was revalued to 20 million and the building to how much? 90,000, 90 million, right?
90,000. 90 million.
Yes, there was no change in the useful life of the life estimate of the buildings. So you can see, as usual, when you're using the revaluation model, at the end of the year, revaluation is done, and you compare the carrying amount with the revalued what? Revalued amount, right? So first of all, I think we need to get
Yes.
our revalued amount. What should be the the carrying amount at the end of the year? Carrying what? Amount
The carrying amount
at the end of the year.
for land is 24 million.
24. This one. And then here should be how much? We should take 128,
It's 120 million. 120,000.
120. Okay, that one, that's great. Okay, so what do we do now? We have our revalued amount, right? Revalued what? Amount. So it's carrying amount. Okay? How do we get the revalued amount? No, it's by choice. You can put it here or you can put it down here. I think let's put it down here. And they write the revalued what? The revalued amount.
Valued amount.
Yes, the revalued amount. Okay, we have the amount for land and for buildings. For land, it was how much? The land was 20 million. And the building,
20 million,
90.
90 million.
So land is 20, so it should be 20,000. And building should be how much? 90.
90 million, 90,000.
Yes, but you know, we have just written these figures. We haven't passed the double entries, right? We need to call the reality now. We have to know whether we have a
Yes,
revaluation gain or revaluation what? So it could be a revaluation gain or
loss.
loss. And if it's a loss, of course, maybe you should put a negative sign there, right?
Loss.
Yes, just that way. So tell me, on land,
Yes,
would there be a gain or a loss? A gain or a loss? It's a loss, obviously, right?
it's a loss.
Because you take the
It's a
revalued
loss. Yes,
amount
for me,
minus the
for
gain
4,000.
amount, 4,000 loss. And what about the building? Would there be a gain or a loss?
It's a gain.
It's a gain, right?
No, it's a loss.
It's a loss.
90 million, 120 minus 90.
Okay. So we have a loss of 4,000, but also a loss of 30 what? Thousand. So you need to know your double
8,000.
entry. Remember, until this point, this is what you have incorporated in the statement, right? But you have put this one. So
Yes,
these gains and losses are what make the double what? The double entry, right? It means that by 4,000,
yes,
we mean that you should credit land. You should reduce your land by 4,000 by crediting it, and we have done it already here, right? And then you should go to
yes,
the income statement and put the revaluation loss of 4,000 in the income statement in profit or loss, right? So instead of
yes,
debit something and credit something, you just go to the income statement and put this, because on the credit side you have done it already just by putting this statement here. And then you go to the building the same way. The figure was 120, but I say that we need to reduce it by 30,000. By reducing it to 30,000, we have reduced it already here, like you see, right? And then this
yes,
30,000 is a loss. It should go to income statement again, right? In profit or loss,
yes,
the revaluation loss. But if it is to reverse a previous gain, it has to go through other comprehensive what? Income, just like we said under
income.
PPE. Yes. So we need to account for these ones, right?
Yes,
Very, very essential. Okay. So this is a loss. You could say it's a loss on land. It's fine, right? Because
yes,
on the credit side, you have credited land and you have credited buildings already. Okay. Let's go to the income statement now. For land, it would be obvious. I would have to debit 4,000. Land. Okay, that revaluation loss code, well, it's that's just an issue of accounting in the book. So you could say that it is just an administrative issue, right? So
yes,
we could decide to take it under what? Administration expenses. Let's say that's a decision we took. So let's take it under administration what? Expenses. So I would say, okay, let's go here under administration expenses here and say revaluation what? Loss on what?
loss.
On land. How much? 4,000, eh? Right.
4,000.
Okay.
Yes,
And then now let's be careful here. Now we have that revaluation loss again. We have again the revaluation what? That's
loss.
the revaluation loss again. But that one is on what? On building.
Land.
No, land.
Not on building.
Yes.
Because it's on building, 8,000.
Okay. Now, how do we account for that? That is only taken to profit or loss. Admin expenses is on profit or loss. So we only take it to profit or loss if it is to reverse, okay, if there is no previous gain that went to other comprehensive income, right? But now you can
Yes,
remember there is that previous gain, right? We are told that previously there was a gain of 24, this one, and this 24, we are told it is in the trial balance, revaluation surplus, and we saw it, right? So first of all, we need to reverse the previous what? Gain. So as usual,
Yes.
we credited the buildings by 20, by what? By 30. We also need to debit revaluation loss by the same 30. What matters is how do we divide that 30 between profit or loss and the other comprehensive what? Income. You see?
Okay.
So that's what we're going to do. So since we already have had the 24 in the trial balance, we saw it again. I think this one is it was here revaluation surplus. We already had the 24, right? Related to the same assets, right? So we need to reverse it, right?
Yes.
So this is what we're going to do. The double entry should be that first of all, you debit revaluation loss, but it goes through other comprehensive income, and then it goes to revaluation what? Surplus and reduce it, right? Of 24. And what remains?
Why are we doing that?
Why are you saying why are you doing that? That's what I told you should always do. Why are you saying why are you doing that? Don't you remember that I told you that revaluation gain goes to other comprehensive income?
I'm a
Okay.
bit confused. It's a loss and we are
Yes, you should not.
yes, but here it's a loss.
Yes, there is no problem. What did I tell?
And we didn't have a gain.
Listen. We did examples. We did examples, and I told you if you have a gain of 40 this year, and next year you have a loss of 60, what do? You take this gain to other comprehensive income, and then you take this profit or loss.
You take the 60 to
No, the 40.
you take 40 to the comprehensive income.
Yes, was the previous year, but this year we have had a loss.
Hello?
Yes. I can hear you.
Sir, you are very low. I can't hear you.
I can hear you. I can hear you. Hello. Hello.
Yes, I was saying 40 you take to other comprehensive income, and then 20 you take to profit or loss.
Yes. No, you are speaking. If what you take to other compare, yes, that's fine. That's what I said you are going to do now. Exactly the same. We are doing that. Then why are you saying that we didn't have a gain? That's what we are doing. I told you that you have a lot. You had 24 previously, gain of 24, right? But now you have a loss of how much? Of 30.
Okay.
The same thing you
Of
said.
30, okay.
So
Again, you've gone.
you have answered the same thing. Uh, hello, hello.
Yes, sir.
My friend, your internet today is very bad. I can hear I can see my.
Is it internet or your audio, sir?
Ah,
Because you go and you come back. Oh,
you know
because if
what?
it was internet, it was going to like see bad internet.
Okay, but I don't. There is something I don't understand. On my case, like when I speak like here, and I can see myself there. I can see myself. My name appears there speaking. But sometimes you are saying you don't hear, but I also see the name there. The name still appears there. You see that? Okay, I think let's just proceed. You can hear now, right? Yes. Let's just
Yes, I can
proceed.
hear you.
Okay. So it's the same thing you said. No, I wondered you wondered, but you are answering the same thing, and that's what I spoke. Previously we had a gain of 24, now we have a loss of 30. We do the same thing. 24 goes to OCI, other comprehensive
Yes,
income, 60 goes to profit.
yes, you are very right.
Yes, I said the same thing. Okay. So here we would say that
Okay. Yes, sir.
out of 30,000, 24 would go to other comprehensive income and 6 would go to profit or loss, at which we have said we take revaluation loss here. So 6,000 should come here, right? And 24 should go to other comprehensive income. Is that fine? Hello?
Yes,
Okay, so let's go
yes,
on.
sir.
Let's take that one.
Yes, sir. I can hear you.
Okay, so on other comprehensive income, we have this figure. Revaluation what? the revaluation loss. You can see the revaluation loss of how much? Of 24, right? But remember, it was a loss, so it's a negative, right?
Income.
Right.
Yes.
Yes, so you just put it there and
Yes, sir.
everything gets done. Of course, as for the financial position, don't worry because you know the total in the income statement always is always taken to equity, so you just know how to deal with it later, right? So you'd have your revolution,
Okay. No.
that everything would be totally settled, right? That one would be fine now. So you can just come down here and say, okay, I've finished, I'm done with another milestone. This note 2, I can no longer worry about it, right? Right? Hello?
Yes, I can hear you.